Unconventional Wisdom, MicroMoment podcast show. And you don't see me. I'm just sort of like just in your closet probably or something like that. But we have Micah here and we have Randy here. Keith is on vacation down in somewhere in Florida, I think, or North Carolina. And excuse me, Terry is probably going to be late. He had to cut short the session on the MicroMoment Trading this morning. So he's probably going to be here late. If not, without him, we've got Randy and Micah, and really a fantastic Randy. Today was just incredible. We had a short session, which we always do on Thursday because we want to get ready for this podcast. And we had just normal 23.09% return over 7 trades. And then before Micah got his computer cut off to come over here, he did another trade for 24.66, an Apple trade. And then it did a QQQ and done for 12.9, so a total of 60.65% today. Now, the reason I'm telling you that, Randy, is you always beat us on these things. And this time I think we got you beat for the day. You want to welcome everybody. Our website is Compound Stock Series. You want to go to, if you would like to sign up for our first thing you're reading, hold on a second. Look, first, let me give you the phone number. This thing is the phone number. The podcast is 214-377-1108. 214-377-1108. And check us out on our website, and which is the new website is www.micromomenttrading.com. And sign up for our cow report. Comes out every Friday. It's totally absolutely free, and it's been published now for close to 20 years, or slightly over 20 years. And so it will be good. Hey, there's Tony. Tony just got on. Tony, I'm just talking voice today. You probably wonder where I am. Well, I'm hiding, but but yeah, you can sign up for our cow report. Comes out every Friday. It's totally free. You can also find out what each one of these gentlemen do as far as their trading goes, and you can see, the seminars they do, and how to sign up, and how to join programs, and just everything is on that website. And in the cow report that you get every Friday, it has all the emails that people have communicated to us with, and questions they ask, and statements they make, and the responses they get from our guys. So again, sign up. Go to MicroMomentTrading.com. www.micromomenttrading.com, and sign up. So that's our new website. It has everything that was on the Compound Stock Earnings website is on that website. So it's not just MicroMoment Trading on that website. It's MicroMoment Trading plus everything else that we do. It's get too confusing to have more than one. And Micah, did you hear what I said about after you left the 2 trades Micah, Tony? Did you hear what I said about the trades that Micah made?
No, I didn't. I saw the stock stuff just completely skyrocketed. So I'm curious.
Yeah, it went up. Got up to 130 or 40 or something, and now it's back down to 7.42 plus 7.42. Unbelievable.
Wow.
He picked up an Apple trade for 24.66%.
Oh wow.
We made 23.09, which I summed up the day at, and then he stayed on after I got off. He made another 24.6, one Apple trade, and then he did a QQQ for 12.90.
Nice. That's awesome.
Yeah, Apple moved $1. Yeah, it was $1.49 in about 70 seconds. It launched, so I got in like 30 cents late on the option buy, but it was crazy.
That's insane. Well, I think we're going to defer to Randy. Joe's gone.
Oh,
So.
Joe, we lost Joe. Well, he told about yours, and I did. Of course, I do the SPX index, and just in the last half hour before we got on here, I did 3 trade the moments, because I don't call them micro moment because they're longer than 15 seconds, but I did 3. I got 5.1%. It was 1 minute and 24 seconds.
Oh, nice.
7.9%, 1 minute and 14 seconds.
Oh, getting fast.
10.1% for 7 minutes. And that one actually, I was in it when all of a sudden the S&P dropped like 12 points in like 5 seconds.
Yeah.
Right along with about the time your Apple dropped down. The it jumped up at about 10 o'clock, a little after 10, because there was more tariff postponement, I think is what they said, that more delays in some of the tariffs. And then I don't know why it all of a sudden dropped back again.
Yeah.
Maybe somebody said, oh no, that was misinterpreted. But anyway, this has been a real wild market today, but really, really conducive for momentum trading, trade the moment, micro moment trading. That's all been really great. And that's the great thing about the technique that you guys use and teach. It lasts for such a short time, and you're in and out for cash at the end of the day. You don't have anything that is left over that says that you have to worry about what happens tonight with somebody tweeting or some news coming out. You're just ready to start over the next day.
Can y'all hear me now?
Joe's back.
I'm back. Okay, yeah. I don't know what happened, but it just cut off. But anyhow, we're not down on the square today. And you know what? Mary had called. She's down on the square. And
she's down on the square.
Yeah, and so hopefully she's listening. But for whatever reason, I don't have a picture. Okay, let's see. Randy, I heard you telling your report. Did you have more earnings than we did today?
Well, the last three, I did 3 just in the last half hour, and it was, let's see, 10, 18, 23.1% total.
That's for the day?
That's just the last half hour.
Oh, what'd you do for the day?
Oh, I didn't add all those up. I can look here real quick.
Yeah, more than 65%.
Well, I did about 7 or 8 different trades today on just on the trade, or not the trade amount, but the.
You didn't do 60% today, did you?
Trade the moment.
Huh.
Well, 60%. That's a pretty high bar to hit. So, yeah. It will take me a second to go back and look at all the ones that I did.
36% of that was in 2 trades, 1 Apple, 1 QQQ. Anyhow, while you're trying to generate figures in a return, Tony and Mike here brag. So Tony, why don't you kind of tell folks what y'all do, and turn it over to Mike and let him add to it, and maybe by then Randy will have generated these returns to claim he's the king of the.
Yeah, no, I don't think I'll get 60% yet.
Well, like we say, you're the grand wizard of covered calls and advanced charting, so I don't think you have anything to worry. So MicroMoment's been doing great. For all those listening, we have a lot of listeners every morning, a lot of new listeners every morning, and we teach all different levels. I mean, if you come into the webinar not really understanding the whole premise, that's fine. We start from ground zero and work our way up, build you up into the program and getting those profitable returns, and then but also we've got some very advanced listeners that've been on for months, and they're doing exceptionally well. They are a lot of times they get more percentage returns than what we have, and so because we go into a trade. We spend only, I always use a max of 2 minutes, typically 2.5 minutes. And then we have a very specific profit target that we want to hit each time we're in a trade. And we make sure we have that, profit target set, the sell to close set. And usually it takes about less than 2 minutes to get, 4 or 5%. So, and sometimes it's more, and sometimes we do have some losers. Today we had a loser, but then sometimes we have washes. But most of the time, of course, it's winning trades, and we get really, really good results from the listeners. We get a lot of feedback. Yesterday we spent over 2 hours, and usually the webinar only only lasts for 45 minutes to an hour and 15 minutes. And we were on, Mike and I were on for 2 hours and 20 minutes or something like that. And so just answering all the questions that our listeners had, and it was really good time, really good feedback. So that's a little update on what we've been doing, and it's been really good. Seen a lot of good results from everybody. So, Micah, do you got anything to add to that, or?
No, I completely agree. Yeah, it's been going really well. We've had a really great dynamic with beginner traders lately. We've had, a lot of times the people that are brand new come in and they don't want to, they even say in some of their questions, I'm new here, I don't want to sound dumb, but can you answer this? And we've really been encouraging them to, that's what we're here for, and bringing in the new traders and starting with the basics. Today we went over the difference between calls and puts and how they gain value and what they are. And, we've really been trying to bring it down and open the span of what we're teaching to make it really accessible. It is a task, and we're improving as teachers to be able to do that. There's a lot involved in training very high level individuals with years of experience and trading people that have never even seen an option. But I feel like we're doing a lot better with that recently. The engagement has really helped. People are asking great questions, and yeah, it's just been a really, really good environment. So
yeah, so it's been great. So I guess probably hand it off to Randy. Talk about how it's going over there.
Yeah, I got them added up. So for the first hour, I did 4 trade the moments, and that was a total of 28%.
Nice.
Between the 4.
It's so great.
Then in the last half hour, that's the other extra 3 that I did. That was 23.1. So that's only 51.1%. I didn't hit the 60 mark. And Joe talks about what's it called, Joe? Trader's fatigue.
Yeah.
Is that what you had?
You got to watch out when you got great returns. You don't want to just keep going, and the more you do, the chance of having one that's not good increases. So I might just be hanging up my trade the moment boots for today, and I'll start again tomorrow fresh.
It's smart approach.
Well, Randy, can you hear me?
Yeah.
Can you? Okay, good. Randy, I know you tried, and I know that you practice self-restraint, not have earnings that would get you upset. Like have too many earnings, because people won't believe you. So.
Yeah, 7 in a row is good. That's the lucky 7. I think I'll stop on that.
I think the big difference here between Micah and Tony's trades, they're called MicroMoments because they only last a few seconds, maybe 15, 20 seconds, something at most. I heard Tony on yesterday say something about sometimes, not Tony, Tony said sometimes these trades, they could be 2 or 3 minute trades. I don't think you guys have ever had a 2 or 3 minute trade. That means the market's probably melted and you have like a 100% loss or something like that. But they're really fast. And Randy, who has a seminar, charting seminar, and all kinds of seminars to teach his techniques, because he has a variety of techniques that make his traditional covered call transactions incredibly manageable and profitable. Where the reason Tony and Micah's trades are so fast is they're in and they're out, and if a thing turns the wrong direction, they're out. But they're out for maybe 1 or 2% loss max, and because they don't have any management ability on those macro moments. You're in and you're out. You're never in anything overnight. Certainly never in anything over a weekend, and you don't care which way the market goes when it opens. Where Randy can make money whether the market's going up and down, or individual positions that he has are going up and down, but he has management ability. He has, because he's bought a stock, let's say, or a leap or something, and sold a call. If the stock goes down, he could buy back the call for a profit and then sell it again, maybe the same day, maybe 2 or 3 times a day. They used to have a long time ago just one expiration a month. That was third Friday. Now they have many stocks have them every Friday. So what we used to think making 3, 4, 5% a month 10 years ago was astronomical. Nobody made that much money. 60% a year. Now you can make 5% a week because they have so many expirations. And on some stocks, it's even better. They had like 2 or 3 expirations a week. So Randy has controlled his obviously his trades don't have to be fast in and out. But on these micro moments, you just can't wait. And on micro moments, they'll have perfect leverage because you don't have any borrowed money. You're not paying anything. You're not buying the stock. And for very little money, you can create an incredible income stream. And I give this example all the time: $2,000 into your account one time in your life. So if you're like 25 years old, you just got out of college, you want to build up money to retire. 2,000 in there, do micro moment, just make 6% a week. 6% a week. They made 60% this today. And I'm looking all week long. We've had 10% on Monday. See, 10% on Monday, 33.23 on Tuesday, 25.92 yesterday, and then today, 60%. If you just in 1 week make 6% each week, just 6% following their trades, in 24 months, your 2,000 is going to be over $800,000. If you then decide you want to retire at 27, then just take 6% return a week, which would be $48,000, and let the other 6% just continue to compound, and you're going to have many millions of dollars over a short period of time. So that's what they do, and Randy has the rock solid everything from buying a call, the old traditional covered calls, paying for the stock and selling the call, and do it on the first day after expiration, which is going to be on a Monday, and turn off your computer and don't do anything for the rest of the month, and go back and look at it on the third Friday. You're going to always have made money because you're going to keep the premium that they paid you. You got that in cash immediately, and then if you're called out, you were called out for a profit. If you weren't called out, you're going to rent your stock again. Best investment program on the face of earth. And that's all we used to have until the trading platforms and computer world changed everything, upended everything. And never did we have to change any of our techniques. Everything that's happened in the market over the last 20 years has only enhanced the ability to make money using our techniques.
Hey, Joe?
Yeah.
We've been talking about trade the moment and micro moment trading, and those are where you're sitting in front of the computer, you're in and out in a very short period of time. But as you mentioned, I teach the advanced charting platinum service, the coaching webinar every Monday morning live in the market, where the subscribers are right in there watching and listening and asking questions. And we always look for momentum, and momentum is the beginning of a new cycle. So we're using the great advanced chart, which has 21 technical indicators all rolled into one easy to learn chart. And you just look at the chart, and when all the lines align, it's get into the position and get back out. And with the momentum trading is what we call using the advanced chart. It's not sitting in front of the computer all day watching the charts going up and down. It's a day or two later, and it just closes for a profit. So right during the webinar on Monday morning, and it's every Monday morning, we entered Cisco, and it closed out Tuesday for 4.8% return. All cash return, 4.8% extra cash added to the account. And then people can decide, do they want to use that cash again and compound their returns for that week, or do they wait till the beginning of the next week? But that was another one of the momentum trades, and it was right there. Everybody gets to see it live right as we're doing it.
Okay.
And you didn't talk about that. We send the email out that says, here's what we're planning on doing, and then we do it in our own account live, and then we send another email out that says, here's what happened, actuals. And so people get to follow along hands-on right along.
It's a little better than that. You send out an email when you're thinking about getting ready to do something.
Yep.
You send out an email when you do it, and then you still, well, I say buy it, and then you send out another email when you're getting ready to get rid of it, and so they can follow you along.
Yes, they can learn step by step by step.
There's those emails from Mary and says, I'm listening, I'm all alone. She was going to show up down at the down at the square.
Look at that, Joe. You left her in the lurch because the construction was going on in the square.
There she is. Yeah. So anyhow, crazy. Peter, hi Joe. With MMT, don't you run out of contracts to buy that will prevent you from compounding even at 6% per week? MicroMoment Trading. Why don't you guys answer that?
Yeah. So that is true. But what we want to emphasize is we can compound our results every day. So what I mean by that is up to a certain point that you feel comfortable. So if you're starting off with 5 contracts, you get the result that you want on that, up to 10, then the 20, 50, 100, 200, whatever result that you are, or whatever capital you're wanting to invest at one time. But you can compound it up to the point that you feel comfortable of a total capital allocated and invested in one trade. After that, it's more like a management.
Hey, Tony, maybe I misunderstood the question. I'm not sure that's the right answer. It seems to me what he's wondered was, I understand the thing about the contracts. Here it is again. Hi, Joe. Let me tell you, don't you run out of contracts to buy that will prevent you from compounding even at 6% per week? That's not the answer to his question. So, and certainly, no, you don't, because you're in and out of these things. You're constantly in and out of them. You're not like they're accumulating contracts.
Yeah.
See what I'm saying?
But and like on SPX, which is the one that I do, there's over 14,000 contracts just today.
Yeah.
And when you're buying a contract, the market maker just makes it up. It's not like there has to be. It's not like stock. The stock is a finite amount of shares in each company. And so if you want to buy 100 shares, somebody has to be selling it. Option contracts are totally different. The market maker just creates them out of nothing. When you say I want to buy 3 contracts, he just says, okay, here's 3 contracts, and he sells them to you.
Yeah,
and then you just sell those contracts then that have been created. You sell them back into the market.
Yeah, I think what Peter's saying here is just slowly sinking in. If you start off, let's say, go back to $2,000, it's only going to buy, how many contracts is that going to buy, Michael? $2,000 on Apple. What would that buy?
Should $1, what is that, 20, Tony?
Yeah,
probably 20 contracts.
Yeah, about 20.
Okay.
15 to 25.
Yeah, and then you're going to make whatever. Say you make $500. Now you got to invest $2,500. So I think what he's saying is eventually because of that compounding, the number of contracts you're going to have to buy aren't going to be available. And I think Randy just answered that. There's a lot of contracts out there, and you would have to be pretty big, and again, remember, you're doing it. You're doing these things multiple times a day. Like today, they had 9 trades, and every one was stood on its own. In other words, they didn't get into the next one until they got out of one, and so you're not just accumulating all these contracts and holding at one point. But again, that's why they're doing the QQQ, which is huge, has a huge float out there of positions, and so does Apple, and that's why they're doing those particular ones. Not only are they not going out of business, but they've got a huge. What's the volume? Like, what was the volume? I can tell you the volume on. And my volume for this, I get this from CNBC. It's up to date, but like QQQ was 13.6 million, and I think probably more like 15 or 16 million. Apple was 15.3 million. It's probably more like 17 or 18 million.
Yeah, you got 14 and a half on Q and 15.8 on Apple right now.
Yeah. And SPY, which is a good one, is 31.2 million. So it's probably like 33, 34 million bucks. Volume, not bucks, but volume.
Yeah, and see, that's one of the important things, Joe. We just don't do trade the moment on any equity. You select the ones that have lots and lots and lots of volume on a daily basis, that have lots of activity. So it's easy to get in and out of the contracts. If you select some equity that only has 10 contracts traded a day, you're not going to be able to do MicroMoment and trade the moment, because you're going to just be buying and selling them from yourself.
Yeah. Hey, here's a note from Martha, and she's actually complimenting Michael. I cannot believe I'm going to read this note. And this is from Martha. And it says, Micah is so patient. As a beginner paper trader, I made 29% today. Thanks, guys. So, yeah, sometimes you ought to hear him sing. If you think he's good trading that, you ought to hear him sing. So,
yeah, and that's important, Joe, that we stress over and over and over again, when you're just starting out, you do virtual trading or paper trading so that you can practice without risking any money. And so you can prove to yourself that you can do it.
Yeah. Okay.
Yeah. One thing about go ahead, Joe.
No, I would just, you see Peter's match, I was just.
I'll mention that one next. But one thing about MicroMoment too is it's a lot more technical on the execution side. There's a lot that goes into, when we enter in the ability to get an extra cent or two on your entry and exit, and it's a lot more of a dance than just buying a stock, holding it for 3 months. Like, it doesn't matter exactly where you enter, but exactly where you enter can totally change the outcome of a trade. If we're making 2-3 cents on some of these trades, that's not much to be able to reverse that. And so there's just no way around it. It takes some time. There's like so many things you're looking at once. You're looking at the option chain, however many lines we got on the chart, and volume, and it's just a lot of information. To get that to be muscle memory, it just takes some time, and that's how you do it. You start and paper trading, you just get the feel for it, and you're doing awesome, Martha.
The other day during the morning session for the Micro Moment, I spoke that Puerto Rican Mike was sending me a book by Michael Lewis called Flash Boys, and it points out, I just got it yesterday, I hadn't had a chance to read it, but it points out that I think it's Ameritrade has the distance, but where you are from where these guys have these trading computers does make a difference on how quick you get the data. And we see that all the time in the Micro Moment. Like, our clients will have a little difference, not much, but a little difference in how quick they get the data. And for instance, I think it was which one has their place here in Fort Worth? I mentioned it the other day. I forgot now.
Ameritrade.
Yeah, Ameritrade. Their main computer center where all their trading is done is in Fort Worth. I didn't know that, but it makes sense because Fort Worth is geographically pretty much in the center of the country, and so all of their things go to that one place. That's the key. They don't have multiple rounds or all their data would be all screwed up. So it all goes to one place. So some place in New York, it's coming down here. I'm over here pointing and all that kind. You guys can't even see. I'm so animated today, but all Ameritrade stuff is coming to Fort Worth, even if it's in California, where Micah is. Now, Micah's day is going to be a little different timing because he's in Seattle. So it's going to be different than a guy in Dallas, Texas, that's trading. But it's not going to be material, but there is going to be a difference. I had a chance to read the book. I'm sure there's other interesting stuff in there. So, called Flashpoint. I'm sure you can get it on Amazon. So,
yeah. Mentioning Peter's question, so at the baseline, there is a limit on what you can size in. You can't size in the $800,000 into one Micro Moment trade. But there's two aspects to that. Is one, we do, we'll do anywhere from 6 to 10 trades a day. And the 6% represents over your account, right? So however you want to allocate, break that up, we can't legally tell you how to do that. That goes into financial advice telling you how to spend your money, which we don't do. We're educational. But it is spreading out that size. And then the other aspect is if you're trying to figure out how to fill an $840,000 position, like the comment just popped up, that's a pretty good problem to have. And you'll also be into a lot more strategies probably. At that point, you could have things running with Randy, and then still trade in the mornings with us, and there would be a lot more diversification than just going into these probably. So your mindset, and not that I'm to the point where I'm making $800,000 trades, but you're in a different mindset there. But the percentage represents what you do over the whole week. However you want to break that up with allocation and how big your trades are is not.
Yeah, Randy, do you see Gene's question there? Do you see Gene's question, Randy?
Yes, I do.
Let me say one thing. Let me say one thing if you'll answer his question.
Okay.
Getting back to what Mike was talking about, the beauty of these techniques, either be it the micro moment or Randy's more traditional cover calls, or even Keith's credit spreads, it doesn't make any difference. You don't have to spend 1 second of time evaluating, trying to think, is what's the market going to do? Is the stock going to go up? Is it going to go down? What's it going to do? Do I need to get into it? You never look at it that way. We have in the toolbox, you've got where it pops up the best trades to be made. You lose money. It doesn't make any difference because it's like buying it. If you buy stock and you don't rent it, just like owning apartments and not renting them. So in Randy's business, his end of it, covered costs and variations, he's buying the stock and he's renting it. And it gives him, because he rented it, he now has the ability to make money every day if that stock goes up and down, whatever, or until it just expires and he gets all his money back. With Terry and Micah, it makes no difference. All we want is activity on theirs, and we're in and out in seconds, and we don't have to ever evaluate. We just look, hey, is it going up or is it going down? And we've got that proprietary charting system that tells them exactly and precisely what's going on with that stock and when to get in and when to get out. And okay, you go, Gene, now.
Okay. Gene said, Randy, is there a separate screener for the weekly and shorter covered calls? He has a toolbox subscription and he only sees monthly options in that screener. And what Gene is referring to is Compound Stock Earnings has a toolbox, a set of screeners and programs that run for the covered call process. And the covered call, as Joe's kind of talked about, the Compound Stock Earnings way of a covered call is not the typical way that the Wall Street uses covered calls. That we use covered calls to buy a stock and sell a deep in the money near-term option that has a positive called return. That means if you buy a stock for $50 and sell a 48 call, which gives somebody else the right to buy your stock at 48, but you sell that call for $4. If you get called out at 48, you're going to have $52 left over when you only had 50 to start with. And that increases the probability that you'll still be able to get all your capital back at the end of the week or the month, because the stock can go up or down. It doesn't have to go up in order to generate your income. And as Joe said, if it goes down too much, we have other techniques to handle the manage to continually generate the income. So one of the things in the toolbox is to say, how can I find a covered call that says buy this stock, sell this option that produces 3 to 5% a month return on that stock? Those are based off of monthly options, because the majority of the equities out there only have monthly options. As Joe said, the weekly options actually didn't start until 2009, I think, is the first weekly option, and they were only on a couple of indexes. So the options that are weekly expirations coming up on the on stocks is a fairly new, compared to the overall market, it's a fairly new thing. And so since all of stocks don't have weekly options, the screener screens for monthly. So you can simply go to the option chain to find out if that equity has a weekly option. If it does, you can do a calculation to say, does that weekly option provide the conservativeness of the entry point and still have a good return for the week? And when you find those,
One other
you're
thing,
in and out in a week instead of a month.
one other technique Randy has is really, really good. People that have stocks and they don't want to do anything with them except collect dividends. Well, stocks may be paying you 3%, maybe 2% a year in dividends a year. You use this technique where you've already got the stock, so you just sell an out of the money near month call. It means it's going to expire every month. It's going to be out of the money, so you're going to collect a fee for that. And if you get called out, it's out of the money. You're getting more than you've got in the stock, and you just turn around and buy the stock for the lesser price. And now you've got the stock profit plus income from the selling the call each month, and you still got your stock too. It's impossible to lose money, and you substantially, hugely increase your percentage return from above the dividends that you're getting. Safest thing on earth to do. It's just, just incredible. Yeah. What do you think about that, Randy?
Yeah, and you can do that if your equity has weekly options. You can actually do that every single week, and you can be selling that out of the money call and just creating that income on a weekly basis, and that really adds up. And that's where, as I think it was, it might have been Gene that was talking about compounding earlier. And you're using that same stock, and every week you're selling an out of the money call, which means the stock has to go up past that in order for you to be called out. So you're going to hold on to the stock and generate 10, 15, 20 cents a week of income that is probably going to be more than the quarterly dividend when you all add it up.
Yeah, quarterly dividends aren't much. So anyhow.
Yeah, and we teach you how to do that in the covered call seminar and on our weekly covered call coaching sessions as well.
Okay. Tony, what time is that call today? My time?
1 o'clock your time.
Okay, good deal. I got you. Okay. Okay. Well, you guys have anything else about our regular time here?
Yeah, we covered everything on the MicroMoment side. We get a lot of carryover listeners, so they're hearing the same thing that we talked about in the morning.
Oh, Tony, you might elaborate. We've got about 5 minutes here. Elaborate real quick on you and or Micah. People, when y'all are doing your sessions, there's a chat box in the service we're using, and people constantly type in questions. You guys answer right on the spot, be it about the charting or what else. But also they really loosed it up now and giving us their returns. And it's astronomical what some of these folks are making, just astronomical. Because we haven't been doing this. Tomorrow will be the end of the 19th week, and we've been doing this trading for several years. But if it's a subscription service, it'll be the end of the 19th week, and we're up 2,400 and something percent, about 150% on average a week. And but anyhow, the people comment on the kind of returns that people are calling into y'all. It's incredible.
Yeah.
I have a question box up if you want me to roll through some of them.
Sure, go ahead.
Let's see. Joseph made 3 cents, 84 to 88 cents real money. From Peck, we got 5 cents on a 99-cent buy. In at 88, out at 95. 10 cents on a Q call from Michael.
Kind of relate to what those returns are, though. When they make
general percentage.
Yeah.
So those are all around the 80-cent mark. So they're going to be a couple of cents more. So the 10 cents is probably like 9%. We had Gene was 149 to 169. 20 cents on 149 is about 12-15%. 63 to 70 from Martha. This is I've gone back 15 minutes now, 13 minutes that all these returns happened in. 63 to 70 is 7 cents on 63 would be, let's see, over 10%, 11 or 12. 11 cents on the Q call, doesn't say what he bought it for. Just like one after the other, there's just stacks of them. So
the original intent of this micro moment, and y'all remember we talked about this, that the intent was try to make 1% a week. 1% a week. And look at this, we make 60%. Randy's over there making 23 or 30% daily. It's just incredible stuff. Frank, Randy, which of your services would work best, easiest in a bear market?
Well, the techniques work in any direction of the market. The micro moment is just in and out based on the moment of the trade. Whether if it's going down, you buy a put. If it's going up, you buy a call. The same thing with momentum trading. Now, covered calls, there's always something going up, even if the market's going down. There's always something going down, even if the market's going up. So all of the techniques are designed to work at any time in the market. It's just you'll be selecting different positions.
Okay. Yeah, that's what we, again, it doesn't make any difference. And see that that's why, Frank, you don't have to worry about what the market's going to do. It doesn't make a bit of difference. It doesn't make a bit, whether you're doing MicroMoment or you're doing Randy's more traditional covered calls and variants that he's developed with that. So, okay. Does anybody else have anything else they want to talk about?
I think we're good. Oh, we added a word, Joe, to the Mike Donahue Financial Dictionary today.
Okay, what is it?
Schnonkered.
Nonkered? Is that
Schnonkered?
schnonkered? Okay.
There you go. Good word. Yeah.
These MicroMoment guys were working up our own dictionary because they have really unconventional trademark. They hop in and they hop out. Hop in means you're buying. Hopping out means you're getting out and selling. And now, what does that mean?
Schnonkered. I didn't even realize I said it, which was a funny thing. But in the Midwest, I guess not everybody says it, but I was talking about the people that got destroyed on when it moved really fast. There were a lot of people in positions that just got obliterated. And schnonkered is in Montana what we say is hammered or like wasted. If you're absolutely schnonkered, you're just
what's that other one you came up? The very first you came up
out of your mind. The first one? Oh God, there's been a few. Pansied, pansied out of the trade, or there's too many to count anymore. But
it helps to create this dictionary when you have a speech, defect.
Yeah, exactly. We'll go.
Mistake,
Yeah, when we do a seminar, we'll go through and give all the definitions first, so they know what we're talking about, and then head into it. But.
Okay, well, guys, thank you very much, and I'll get this picture. I don't know what the little green lights on the camera's supposed to be on, and I don't know.
Hey, one more quick thing, Joe, because I don't know if you mentioned that you're going to be teaching the covered call seminar coming up at the end of the month, and
that's right.
People can go to the Compound Stock Earnings website and register for that. And so they can start learning how to do these techniques.
Yeah, it's all day Saturday. Not all day. I mean, it's from about 9 o'clock in the morning until 3 or 4 in the afternoon on Saturday, and on Sunday. The 2-day. We've been doing that seminar for 20 years, I guess. So.
Yeah, it's September 21st and 22nd.
There you go. Last couple of days of the weekend, last weekend of the month. So we'll go from there. Okay. Well, thanks everybody for attending, and we'll see everybody later. Okay.
Hope everyone has a great weekend.
Hey, you guys, see ya.
Yeah.
Take care.
Awesome.
Bye.